And I heard someone tell a story that they heard from Warren Buffett about what happened to Rick Guerin, which is back in the 1970s, he had borrowed a ton of money to invest. He was going into debt so he could buy stocks. It's called margin debt, leverage. And during a bear market in the 1970s, when the stock market fell a lot, he got wiped out. Because when you borrow a lot of money, if the stock market goes down 30, 40, 50%, you're done. You're completely out. And Warren told the story that he said Rick was just as smart as he and Charlie were. He was just as talented as an investor. But he said Warren and Charlie always knew that they would get rich, so they were not in a hurry. And he said Rick was just kind of in a hurry to get there. So he wanted to borrow money to speed up the process, and it blew up in his face. And that I thought was really interesting, that the people who was, Warren is one of the richest men in human history, and he was not in a hurry at all. He said he knew it was going to happen. There was no rush. I thought that was a really interesting thing, that a lot of times when people try to speed up the process above its natural rate of growth, it's just going to backfire on you.
Yeah.
And I think that had a big impact on me. It's so natural to want to speed it up. And in a perfect world, I would love to get rich overnight, of course, but it's just not how it works. There's usually a natural speed at which these things occur. And when you try to speed them up above that level, it's going to come back to bite you.
And that's why a lot of these get rich quick schemes, you can never trust them.
You never trust it. Warren has a great quote about investing on margin, borrowing money. He says, if you're smart, you don't need it. And if you're dumb, you shouldn't be using it. Like, there's no justification to be using it. I thought that was a big takeaway. But a lot of investors do. Even first-time retail novice investors, you open up an account with E-Trade or Robinhood, and you can go into margin debt. You can borrow money to buy stock. And a lot of people don't realize the ramifications of that until you're in a bear market like we are now. And some of these stocks fall 50, 70, 80%, and they're wiped out. They lose everything.
Yeah.
It's a tough situation.